Forget everything you thought you knew about the value of the metal in your safe. We are currently witnessing the absolute destruction of the global pricing system, and most investors are staring at a screen that is feeding them a total fabrication. While Western tickers show silver at $120, a massive structural rift has opened. Over in Shanghai, the physical metal is changing hands for $167. This isn't just a minor discrepancy, it is a 42% explosion that signals the death of Arbitrage. The machinery that once kept global prices in sync has seized up, and as you watch this on The Secret History of Currencies, ULL realize that the physical supply is being pulled into a vacuum in the East, leaving Western vaults hollowed out. The era where paper contracts dictated reality is over. If you've ever wondered what happens when the same ounce of treasure carries two completely different price tags on opposite sides of the planet, re-looking at it, this isn't just a market hiccup, it's a tectonic shift vibrating from the trading floors of New York all the way to London and Shanghai. If you're a physical holder or even considering becoming one, the rules of engagement just changed forever. On January 27, 2026, we hit the point of no return while New York's COMEX was stuck in the mud around $115. The ground reality in China saw silver hit historic peaks of 28,461 yuan per kilogram, roughly $167 per ounce in actual transactions. Your computer is telling you one story, but the physical world is screaming another. This isn't your typical market spread. We are talking about a chasm ranging from $17 to $50 depending on how desperate a manufacturer is to keep their factory running. Usually traders would jump on this like sharks buying low in the West and flying it east to pocket the guaranteed profit they are trying. They are booking every emergency flight available, but the gap isn't closing, it's stretching. Why? Because there is no metal left to move. This isn't a shipping delay or a temporary logistics snag. It is a fundamental collapse of the supply chain that has been hollowed out for years. The secret history of currencies has always tracked the movement of real wealth, and right now the signal is clear: the safety net is gone. Normally these price gaps vanish in hours. The fact that this one is widening proves that when traders knock on the doors of London and New York vaults, they are finding empty rooms. Chinese buyers are offering nearly $10 over the spot price just to get to the front of the line, and they still can. Fine enough, this isn't a healthy market, it's a desperate one. The real hammer dropped on January 1, 2026. China flipped the switch on a restrictive licensing regime, allowing only 44 hand-picked companies to export silver. If that sounds like a familiar strategy, it's because it's the exact blueprint they used for rare earth elements back in 2010. By choking the exit, they sent prices on a 1,000% vertical climb. But silver is far more dangerous than rare earths. You can find a workaround for some minerals, but you cannot build a solar panel, an electric vehicle, or high-end medical equipment without silver. It is the irreplaceable heart of the green energy revolution. When the world's primary refiner, a nation that processes nearly 70% of the global supply, takes 35 million ounces off the board, it's not a tweak, it's an execution that is 4% of the world's annual demand simply deleted from Western reach. Manufacturers are panicking, and the premiums they are paying today would have looked like typos 6 months ago. To see how deep this rot goes, look at backwardation. On Christmas Eve 2025, the Chinese market flipped. Usually buying something for delivery in the future costs more because you have to pay for storage and insurance. But right now, people are paying a massive premium to get the metal today rather than 6 months from now. They are terrified that in 6 months guaranteed delivery will be a punchline. This is the first time in history we've seen this in China. It's a red flare over the global economy. Even the big institutions are bolting the doors. The UBSSD, Chinese Silver Fund, recently stopped taking new money. Why? Because the fund was trading at a 20% premium over the actual value of the silver it held. Investors were so hungry for a claim on real metal that they were paying $120 for every $100 worth of silver in the vault. That's not investing, that's a stampede. All these pieces, the $167 physical price, the broken arbitrage, the export bans, and the institutional shutdowns are part of a single puzzle. The global market is shattering into isolated islands. The secret history of currencies is here to warn you: when the physical metal stops moving, the paper price loses all meaning. The question isn't Whether silver is becoming rare, the data proves it is. The real question is, what happens to your paper? Silver, when the exchange admits they can't actually give you the bars they promised? Look at the LBMA in London. Their stockpiles have plummeted to 155 million ounces. That sounds like a lot until you realize it represents about 60 days of global demand. 2 months of cushion, and much of that is already promised to multiple people through the smoke and mirrors of fractional reserve banking. The real, unencumbered metal available for delivery is likely a fraction of that. We can see the fear in the lease rates, the cost to borrow silver. Typically it has a negligible 5%, today it has skyrocketed to 8%. That is a 3,500% increase in the cost of just holding the metal for a short time. Bullion banks and refiners are so desperate for physical supply, they are paying credit card level interest rates just to borrow a few bars. This crisis was 5 years in the making. We've had half a decade of massive deficits where the world used more silver than it mined. We've been eating our seed corn, draining the above ground reserves to hide the shortage. Now the cupboards are bare. In Shanghai, inventories are at a 10-year low, barely enough to cover 1 month of Chinese industrial use. Regulators are acknowledging their chaos. The Shanghai Gold Exchange recently doubled its daily price limits to 14% and jacked up margin requirements. They are bracing for a violent explosion because they know they can no longer suppress the pressure. Even industrial giants like Elon Musk have publicly voiced concern, noting that these export restrictions are a direct threat to high-tech manufacturing. If the man with the largest supply chain on Earth is worried, you should be too. The activity in the West is equally frantic. The SLVF saw $38 billion in volume in a single day. 2/3 of the entire fund's value changed hands in 24 hours. On the COMEX, open interest has ballooned to $285 billion. But here is the kicker: speculative gamblers only make up 19% of that. In past rallies, they've made up 50%. This means the big explosion hasn't even happened yet. The massive spike will come when the retail crowd finally wakes up and tries to crowd into a room that is already on fire. The commercial banks are currently trapped in a short position of 275 million ounces. They have promised to deliver silver they do not have. In a world where China has locked its doors and Western vaults are empty, those banks are heading for a total wipeout. They will either have to buy silver at any price to fulfill their promises, or they will default. We saw this with nickel in 2022, when the physical reality broke the paper market. The exchange simply shut down. We are looking at two paths. In one, the physical price finally forces the paper market to wake up, leading to a surge toward $200 silver by the middle of 2026. In the other, the exchanges declare force majeure and tell you they settle your contract in cash because they have no metal. If that happens, the silver in your hand becomes priceless, and the silver in your digital account becomes a memory. Check your holdings. If you own an ETF or a bank-managed account, ensure it is segregated, physical, and reachable. If you own the real thing, realize that the numbers on the news are a lie designed to keep you from knowing the true value of what you hold. The global revaluation of silver from a cheap commodity to a strategic war chest asset is happening right now. Don't be the one left holding a paper promise when the world realizes the vaults are empty.